What's going on, traders? Welcome to another price action trading video. Let's get straight to this. Today started with a very strong bullish uptrend. The price is making higher highs, keeps making higher lows. We keep closing above the EMA and price fails to close below the EMA. When we see this is a strong bullish uptrend and we need to locate our key levels and key entry points because price is always in some sort of pattern. It's not just floating randomly on the chart. So keep that in mind. Now this pattern could be found easily off the first few swings. Take a look how these lows are working higher in the geometrical pattern. The trend line really fits nicely and price confirmed the trend line right here. So by this confirmation we know that this entire channel is valid. When this price is working higher, we only look for reasons to buy, and not just anywhere on the chart. We wait for price to make its way to key entry point, to this trend line, or either to this exponential moving average. This is where all the magic happens, and this is where a high probability setup occurs. Now, high probability setup is a two-legged pullback, a second entry at these key entry points, and price form a new extreme. This high is higher than this high. So when we are looking for longs and we are counting, we're counting from this high, first entry long, pullback, second entry long. But this second entry long is not close enough to the EMA and it's not touching the trend line. The signal bar, however, is a small bullish inside bar, so you're not risking much. So it is slightly aggressive entry, but since you're not touching the key entry point, I'm not a big fan of this. However, this was the first break of this uptrend. And after price will break the trend line, we expect for traders to attempt to create new extreme. We don't counter trend trade, we attempt and we look for a new extreme. And you guys can see price form a first leg to a new high, pullback, second leg to a new high. So we know that with the two legs to a new extreme, that this uptrend played out, and from that point on, market can go either into correction or straight up reverse. Now you may have a tendency to widen the channel just a little bit, and you may be thinking that this cannot hurt nobody, this looks valid, it still fits. But you have to understand that when it comes to trend lines, the first trend line you would see, the oldest one, the first one you would see, that's the one that is valid, because you can get stuck looking for new extremes while the uptrend already played out. If you widen the channel like this, you will see price pushing below EMA. You will be still thinking long. You will be still looking for a new extreme, not realizing that the uptrend already played out. So you don't want to flatten and widen the channels like this unless the market is heading and resuming into a strong uptrend, okay? So you play this like this with the two legs to new extreme, and there's a straight up reversal. How do we know? Three big bearish bars pushing through this exponential moving average. This indicates change in the momentum. And just like we were looking for second entry longs with the trend is right now down, at least temporarily, and we're looking for second entry shorts with the downtrend. There's the new extreme. So we're counting from this low, same way we were counting from this high, counting from this low. First attempt to go short, pullback, second entry short. Where? At the exponential moving average. This is what we want to see. This move was fairly steep. This is a big steep bearish move down, and these steep moves, a lot of times, you know, there's going to be a slightly larger correction and they will, you know, correct very quickly. Now I didn't take this entry right here because the signal bar was way too big, but once price attempt to go higher and close below EMA once again and created a bearish bar, this is now a lower high setup of this second entry short, confirmation of this second entry that this is valid, and this was my first entry. Now this signal bar is horrible, okay? If you skip this entry because of the signal bar of the big stim at the bottom, which indicates a strong bullish pressure at the very last seconds of the bar closing, you did the right thing. You acted as a trader should act and skipping this trade. Since I'm a little bit more experienced, I really trusted the context. I really trusted the second entry short and the lower high setup that I took this trade because the overall context was completely in our favor. We are heading to a new extreme to low. Had this signal bar been slightly smaller, this would have been a great entry. You could have played it with the limit order actually and get a really nice fill. And now price made a new low or attempt to make a new extreme, which is sometimes close enough, pushed higher, and we are starting to, you know, go a little bit of sideways. So from this point on, it was fairly confusing because this was quite unclear whether the market is going to push lower or push higher. So when you're in doubt, you're not forcing trades, because when you're forcing trades, this is when you start making a lot of mistakes. And price, I was honestly expecting for price to keep pushing above the EMA and resuming the overall uptrend, because this is what we started. And since this is what we started, this is the main pattern, and I was expecting for price to push higher above the EMA and continue working higher. It didn't happen, and it set up this trend line, because the way we pushed below EMA, this is where I drew from the first two swings, this trend line. There's the new extreme. We push below EMA and there's a first entry long, pull back, second entry long. We are not looking for second entry long here. Why? Because the trend is down. We are looking for second entry long with the direction of a trend. With the direction of a trend, we're looking for second entry shorts, okay? Since we are looking for second entry shorts, the second entry long can be a trap. And this is, guys, what this setup is. Second entry long, coming off the EMA, close on its low. This is a failed second entry long high probability setup. I didn't take this trade myself. I should have, and it was quick, easy scalp. And market reversed higher. And take a look what happened. Normally, I drew these trend lines from the very lowest point of the move. But if you take a look at this trend line, you have a break, you have a move to a new extreme, another move to a new extreme, another move to a new extreme, and this entire leg is 3 times as big as this first initial one. So something tells me that this is not right. Normally, when you have a small leg like this, you have additional leg that looks something like this. First entry short, second entry short, two-legged pullback. These two legs are very similar, but this is the first leg pullback, and this is a major move up. So I decided to delete this trend line and start from the higher lows, and this is what my second trend line would look, and it fits price nicely. So I know that this is valid, and price pushed once again strongly above the EMA. Once we had the break of this downtrend, I was expecting for price to create a new extreme right here, but there was no entry, okay? There's a first entry short, second entry short, but we didn't trigger below this bearish bar. We didn't close below this bearish bar, and I have to watch the market go without me. The market just pushed higher, and at this point on, it's really starting to get confusing, because the downtrend, it looks like we may not get a new extreme. The uptrend, we're once again at the very resistance. So this was a fairly confusing sideways movement, and if you're not sure, my best advice is just sit on your hands. I wasn't really sure about shorting just yet. None of these signal bars are really great. When we are counter trend trading, we want to see a good signal bar. However, then at the very last second, this nice bearish inside bar formed at the very top of this trading range. This is a clear trading range. EMA is suddenly getting flat. We are swinging up and down, up and down. And the way you trade ranges, you buy lows, you sell the highs, or you fade the breakouts. And right now, you're selling the resistance. So you're doing the thing correctly. Small little inside bar, allowing you to enter with the small stop loss. Great momentum. I didn't manage to put the limit order in time, and market quickly pushed lower, and market created an additional big strong move down. When price created this new low, I expected the downtrend to be over, because I figured that this new low is correlated to this trend line, to this downtrend. Break of a downtrend, two legs to a new extreme, and price may reverse. So once we push strongly above EMA and price was fitting nicely inside of this trend line, what are the rules telling us? After break and a new extreme, market will either correct and it will go, or straight up into reversal. So I'm expecting for price to get first entry short, pull back, second entry short above the EMA, but it didn't happen. We pushed back below EMA, and this already indicates something, because this, if the reversal pattern is correct, we were supposed to push above the EMA, the bulls are supposed to be above the EMA, and we were supposed to be going higher. So once we push back below EMA, this indicates that there's probably a larger pattern, okay? It doesn't really fit too nice off the top, but it fits quite nice off the bottom. You guys can see, whoops, I'm just gonna copy it, make it a little bit, fit a little bit nice. You guys can see how nicely it fits off the bottom. So even though you have only 2 confirmation at the top, or even potentially 3, you can see that the price keeps making its way lower. So this was a little bit confusing price action, because it's looked like a trading range, but there is a slightly downward bias, okay? But since you don't push above the EMA and you push back below, this is where you have to adapt, and this is where we have to keep looking for shorts. And there is a new extreme. There's the first entry long, pullback, second entry long, failure. Same thing that happened right here. First entry long, second entry long, failure. First entry long, second entry long, failure. This is a high probability setup, because this is a trap. Two-legged pullback in the direction against the trend. It failed and it closed below the EMA. And this was my second trade, and easy scalp. Unfortunately, once again, the runner got stopped out. And then you have a bullish correction. So you have to drawing the short-term trend lines. They will keep you on the right side of the market so you don't jump the gun too early. And remember, the bigger trend is down, which means that the bullish corrections you have to draw quite tight. You cannot draw wide bullish corrections because these are just corrections against the overall trend. And this is just how the market acts, and we have to draw the corrections tight. You have a break, you have a new extremes, and which means that this bullish correction play out, you have only first entry short, but it's a fourth confirmation of this higher trend line. The overall trend is down, big bearish bar, full bearish body coming off the key entry point, and trend line is the strongest key entry point. This was worth the risk. However, I didn't take this trade. I was already 2-0 and I was done for the day, but then price created this lower high setup. It triggered higher, trapped everybody going long into this trend line, and then it instantly reversed. Once again, what is the bias? Bias is bearish. Price keeps pushing below EMA, and this is a form of second entry short. However, this is engulfing bar, so you cannot enter at the very low of this bar. This would be a very big of a stop loss. There may not be enough room to lose. So what I did, I placed my limit order at the close of the previous bar, and price just enough came back, filled me, and instantly reversed. Now mind you, at this point I was already thinking that I'm going to be done for the day. I was 2-0 and I managed to take this trade, and it happened to be a winner. I was 3-0 for the day. And if you guys can remember, on Friday in my last video, I was 2-1 for the day, decided to take a trade at the very last moment, and decided to being break even 2 for 2. So even though I had a winner right here, I don't think it was smart of me to take this entry, because once I'm decided to stop trading, I need to stop trading. Because even though the setup looks very tempting, it's look very high probability because it is coming from key entry point, lower high confirming the key entry point, we close below EMA, everything is looking good. You have a set of rules that you have to follow, you have a plan and strategy that you have to follow, and once you call it a quits, don't be greedy. It ended up working this time, but I'll have to keep an eye on this. So once I'm done, I have to stop taking trades no matter how good they look. And price pushed lower, and then you have a new high, and you have a first entry long, pullback, second entry long. Do you guys see the pattern? Once you are in a downtrend, you're looking for second entry shorts, but you need to respect these short-term trend lines because they are valid. You need to wait for break, attempt to make a new extreme. So you cannot take second entries when they are inside of these channels, or you enter a failed second entry longs. First entry long, second entry long failure, first entry long, second entry long failure, first entry long, second entry long failure. The price action is simple. There's no holy grail. You don't need to do anything. You don't need to overcomplicate it. Just look for these patterns. I will mark this. I didn't like how close we were to these lows right here, so I think this one is quite aggressive. But when it's such a nice bearish reversal bar and it is a high probability setup, I understand that you want to pull the trigger right here and market once again confirm the lower trend line. So there's no denying this downtrend is perfectly 100% valid. Okay, this is now no longer trading range. We keep making each new low is lower than the previous one, and each new high is higher than the previous one. Okay, this is a clear indication. And just like I mentioned at the very early part of the video, there's always a bigger pattern in place. Price is just not randomly floating on the chart. You guys can see there's a reason why price is turning down at these high points and is turning up at these low points. This is not random. Okay, we don't care why market does it, we don't care how market does it. Only thing we care about is that it works, and you want to capitalize on this, and these are the key entry points that create a high probability setup. And there is a situation which was quite confusing. I was on the break at this point on, and there is a second entry short, two-legged pullback. You guys can see lower trend line, break, new extreme, so you know that the uptrend played out. You're at the key entry point, small bearish bar. This is a textbook second entry short, high probability setup, and it failed because nothing in price action is 100%. If it was, everybody would be day trading. So you guys can see these setups, they work 8 or 9 times out of 10, and this was just the one time that it failed. And just look what happened. They trapped everybody and then it reversed, and it go exactly where you thought it was going to go. So this was just a shakeout trap, and there is nothing that you cannot foresee this happening. You cannot not enter this trade thinking that this may not work, because if you look for excuses to take this entry, you will look for excuses on every single setup, and you will miss all of these setups, because on every single entry you can make and manufacture a story for this entry to fail. And this is not how you want to trade. We put odds on our side, and we need to believe and stick to our plan. If you keep manufacturing stories that this trade may fail for X and Y reasons, you will end up not taking trades, and you will be frustrated because you will see all these trades go without you. And just because they're not 100% perfect, you will get frustrated. Okay, so if you took this trade, you did okay, you followed the rules. And remember, if you take a look, all of these trades are winners. So the math is on your side, and you're still making profits even though if you have a losing trade right here. But market broke, pushed higher, pulled back below EMA, indicating strong bearish momentum. They just trapped people going long. However, this bar is too big, so I think you still want to be a little bit careful. Plus, you're probably shaken by the loss. But once market attempts to push higher, fails to do so, and instantly reverses and close below EMA, this is the lower high situation. Same thing right here, lower high, lower high, lower high. Okay, so this is the lower high, close below EMA. This is when you want to enter. You have to be emotionally stable. You cannot get shaken by this loss, so you can enter this trade and make the profit back, because with 1-to-1 ratio you can easily make up for this loss. Okay, when I'm looking at this in hindsight, the only thing that would probably stop you from taking this trade if you're a little bit more advanced is that you notice you were coming from the very low of this trend line. And in trend lines, when you're coming from the lows, you're heading to the upper side, from the upper side to the low side, and so forth and so forth. It acts as a trading range. It's just slanted. So when you're coming from the very low side, you're most likely expecting for price to make its way to the other side. Okay, so this is the only clue that is here for you to skip this trade. Take a look, market is pushing higher, and you need to draw this trend line just like here, just like here, and just like here. So once you have a bounce of key entry point and the signal bar is not ideal, you know that you're inside of this channel. It's tempting to take this short, but you need to respect this channel just like you respect it all the time here. You have a break, new extreme, and this is starting to get fairly confusing because you're expecting for price to attempt to create new extreme. Okay, this is the major channel. You have a break, so you're expecting for price to create new extreme, but also this bullish move up is fairly strong. So once again, when in doubt, sit on your hands, and there ends up being a channel like this. Hold on, this is not really what I like. A channel like this. There ends up being a channel like this. It fits nicely off the top. There's a break, multiple legs to new extreme, resistance forming, price fails to break above, new extreme, first entry long, pullback below EMA, indicating our direction, the bearish direction, second entry long, failure. You close below EMA, big bearish bar, you're heading towards a new extreme, new low, and this uptrend correction played out. Plus overall the bigger trend was down, so you're leaning more towards sells at this point on. Okay, so this was the setup for the day. Just remember, this setup was pretty tricky. If you took this trade, I cannot blame you. I was on a break and I would have probably taken this trade myself. Okay, so don't overcomplicate losing trades, because if you're gonna think the losing trade, if you're gonna think it over too much, that will force you not taking all the good ones. Okay, so hopefully the video was useful. If it was, please hit the like button, subscribe to the channel. I'm gonna see you guys in the next one. Take care, everybody.